So there is a commodities trading giant known as Gunvor? Gunvor. It's actually a Swiss company, but owned by a Russian. Nonetheless, the biggest surprise in the story was the reason why Gunvor chose to discontinue its gold trading as of just now, recently. Per Bloomberg, quote, executives decided to abandon the precious metals trading business partly because of difficulties in finding steady supplies of gold where the origin could be well documented, one of the people said. So what does that mean? Because if the world's fifth largest trader of commodities has chosen to outright not trade gold and thus not generate value for its shareholders over risks and fears that another or two or three or a countless number of other prior, quote, owners of the same gold may come knocking one day and demand delivery of gold whose origin could not be well documented by its trading intermediaries, and whose ownership link Gunvor is unable to trace, then just what on earth is really going on with the world's physical gold inventory? And he says, here's looking at you, Chinese gold-backed commodity funding deals. And just what is the catalyst that will unleash what is essentially the infamous U.S. mortgage robo-signing scandal onto the gold arena, at which point owners of gold realize the gold they thought they owned, even if held safely in a deposit box deep in a gold vault in a safe offshore location, in reality belongs to someone else. This is exactly what I was thinking as I read this. This reminds me of the mortgage crisis, where they, you remember you gotta, going back to, I don't know, let's say probably starting in 2003, 4, 5, 6. Do you remember, those of you that have or had a mortgage then, you get a little letter in the mail. ABC Mortgage Company, your previous mortgage lender, has sold your mortgage or note to us, XYZ Company. Effective on such and such date, please start making your payments to us. And you're like, whoa, where did this come from? My main mortgage company didn't even contact me. But by God, you better start paying that new mortgage to someone, that person that said that they own it, because if you don't, you're going to get nailed immediately, late fee, your credit's going to be hit. And all right, well, no big deal, right? They sold off this loan to some other entity, company, and now they're going to service the loan. Man, honey, come here. Wasn't it just 6 months ago we got one of these letters? Yeah, about that. I've got another one. XYZ Company has sold the mortgage to QRS Company. And now I gotta start making payments to them. Well, I guess they sold the note to someone else. Oh my God, you're not gonna believe this. A year later, I got another letter. Very common. And the problem with that was chain of title. The chain of title, this is part of the mortgage debacle right now. Every time it changes hands, that note, each individual entity that owns it, right, the president of that company or someone with the authority in that company to sign off on that note, is supposed to sign it so that the transfer of the note is checked from A to B to C to D till where it finally ends up, which is hopefully, F or G way down the line, which is you, and you can trace it all the way back. Everybody signed off on this note. It's legit. Because if even one person, or company in this case, did not sign off on that note properly when they had it and gave it to the next guy, there is a break, what they call a break in the chain of title. It is that break in the chain of title that is going to be causing massive problems when people go to try to pay off their mortgage. Oh, I own the note now. Finally, 30 years later, I've paid it off. Oh, wait a minute. Hold on. Lawsuit. 3 guys ago that had your note, back 17 years ago, they are claiming they're the original owners now. That they are the owners because they were the last one on the chain of title. Or, and the last 3 people that owned your note, including the final one you've been paying for years and years and years and years, which the prior 2 are bankrupt now anyway, so they're like, we can't get it with them. You don't really own it. Okay, but I paid my money. I gave all my money all these years to that last company. You better look at them for your money. If you're saying you are owed all this money, back payments, no, this note was given to them. I paid them. It's theirs. Well, you see, the court system, legally speaking, chain of title wasn't properly followed. There was a break in the chain of title. But wait a minute. When these things happen, aren't there title companies involved? No. See, the title companies who do the homework to see if there's a break in the chain of title before they can give you the okay to buy the house, that there's no problems. They only really come out when you're selling the house. See, these title companies don't really get involved when they're just transferring the note, the banks. So you can't really point at the title company for saying, hey, you said this was legit when I bought the house, because that was, 30 years ago. But in between that 30 years, you've had multiple mortgage lenders, servicers, and there's a break in the chain of title. So the last person that signed off on it is really kind of sort of the owner. And they're asking me for the money in full right now for the last 15 years. Yeah. Okay, well, the last 15 years, Bank of America got paid. Oh, yeah, but it wasn't really Bank of America. It was a subsidiary. If you ever notice it, where it says Bank of America, LLC, home loan, whatever, home loan, that's not really them. So that particular company is filing for bankruptcy right now as we speak, because this is a little pandemic that's happening, you could say. Pandemic. And you can't go get the money from them to give to the new guy because they filed for bankruptcy protection. So you're saying I got to pay another 15 years of a mortgage to this last person? Yes, plus late fees, and your credits can be hurt on that one. That is a very big potential to happen, by the way. I've done the research. So now what you're telling me, relating to the gold market, 5th largest commodities trader in the world, is halting trading of physical gold because, as I said, we don't know we don't know if we can trace the origins, because when gold is traded, and then it's traded again, and then it's traded again, and then it's traded again, and you're using what they call the intermediaries, that would be like the people like, John Corzine, MF Global, who are certified with the Security and Exchange Commission and the CFTC. We're legit, use us, we're part of the banking club. Only to find out, yeah, you're part of the club. And now there's problems with this gold that you've sold, and it's transferred hands multiple times now. And we've got multiple parties with legitimate claims that that's their gold. That one bar belongs to multiple people. Because you've sold it and resold the same bar to other people. So this is slightly worse than the mortgage debacle because, well, I don't know, is it? Because, yes, they sold your note, and then this one got it and sold the note to somebody else. They just kind of, it's a hot potato with the mortgages. But as far as I know, I don't think, now, and this, I could be wrong on this, but I don't think that your mortgage is on paper somewhere owned by more than one person who are all expecting payment. In other words, if you always look at your mortgage payments, it never says you're paying us directly, your mortgage directly to us, to whoever the bank is. They are always the servicer. We are just a servicer of the note. So whatever money you give us for the mortgage, we're dispersing it to where it belongs. So if multiple entities own your note, that would mean the bank sold the note not only to this company, but they sold the same exact note to this other company, and now they've got to pay both of those companies the same amount of money, which wouldn't make sense because you're only paying a certain amount to the bank. So those two companies that think they both own your house are going to be both saying, hey, you owe me X amount of dollars a month, and yeah, you also owe me X amount of dollars a month. That's why I don't see that happening in the mortgage industry. But when it comes to gold, that's why this is far worse in gold. They've sold that gold, and because no one is storing the gold with themselves, they're letting these people, the intermediaries and these storage places, you got my gold, it's there on paper, I bought it, and on paper it's there, and on paper I could always request it. And little do you know, that same bar of gold is also owned by somebody else with the same rules in place. It's on paper that you own it. It's physically stored at some location here. You just need to request at some given time you want your gold. And because so many years and time has gone by where no one has ever really requested the gold, why would you want to keep this extremely valuable asset at your house when you could keep it in one of our secure storage facilities? It's yours. It's there, buddy. Just come knocking and we'll give it to you. Just like hundreds and hundreds and hundreds of years ago, with really gold, when gold was money, you can put gold on deposit with a bank back in the day. And then, because then at that point you can't get robbed. Someone can't do a holdup on you and take your gold. You're finished, right? But if you put it in one of these secure banks, you could they get a deposit slip. Now you can just take these checks. Oh, you owe someone money for something? Okay, well, pay to the order of this guy over here, an ounce of gold. Sign it. They then take that to their local branch and can take out that ounce of gold, or simply just say, like you do now, I'm just going to deposit this in my own account. So that piece of gold that the other guy had now goes into your account, physical storage. Once again, this is how it started. Bankers realized we can lend out this gold to other people because most of the people don't want their gold out because they don't want to get it stolen from them. They're going to leave most of it with us until a financial problem occurs and people start getting nervous and scared. The first thing they do, they run to the bank. Give me my gold out. The very first people who get there and figure this out are the ones who get their gold. Everybody else after that, sorry, bank run, there's none left. What do you mean there's none left? I physically brought you X amount of gold just days ago, as a matter of fact. What do you mean it's not here? I physically gave it to you, so it has to be here. Well, sir, you're not going to want to hear this, but we've been lending not just your gold out, but everybody's gold out. And because of this economic collapse that just took place, people couldn't pay it back. It was a big nightmare, as you heard in the papers. We don't have it. So we have that same system today, except in paper money. And not only that, we still have gold and silver being traded by the big boys, especially like this giant, who now question ownership of said gold that they think they have owned. So that's why they're getting out of all their positions and calling it quits for that reason, he says. How is this happening right now when just days ago CME Group implements the rule change of gold and silver on the trading on the paper markets? $12 a move is the move during a trading session for silver, and $400 is for gold. In gold, each time it hits $100, the circuit breakers are triggered. For silver, each time it goes up or moves $3, circuit breakers triggered. No trading allowed for X amount of minutes, then it starts over again. Moved up again, $3 again, circuit breakers are triggered. Why did they just implement that, or come out and say they're implementing it, which takes effect on the winter solstice perfectly, December 21st, which is, I believe, a Sunday, and then Monday morning, the 22nd, it goes into effect. Does that mean it's going to be some kind of weird crazy trading all of a sudden that week? I don't think it'll happen that fast, honestly, but they're implementing it. We also have Congress guaranteeing, like I said, same day, Thursday, last week, guaranteeing the bailout of the derivatives contracts by the big banks, which it's to the tune of at least $200 to $300 trillion if they fail. And as you've always been told, it's a daisy chain. When one derivatives contract fails, the credit default swap insurance kicks in by another bank that they don't have a few trillion even to take care of that bank, so then they're immediately in default. And because they're in default, another bank is looking at them, or they're looking at another bank. Hey, we need insurance to bail out Bank A. We're Bank B. So Bank C, we also have insurance contracts with you. Bail us out. Well, I don't have that much money to bail you out. Okay, well, C, then you go to D. C needs some money to bail. Big daisy chain. And that's going to equate to trillions and trillions and trillions and trillions of dollars. That has to be printed to be bailed out. Got to bail them out, man. So that they can come up with this new currency that's going to be backed by gold and silver. By the time the average American understands or even sees what has just happened, it will probably be too late for them to say, "Oh my God, I need to go get some gold and silver." It won't be too late for them to realize that, but it'll be too late for them to go and do it, because the amount of money gold and silver is going to be at that time is going to be ridiculously high. So that's all I got for you. Of course, I got 3 or 4 emails to myself to do a video, but I don't have time to do them all right now. Take care.